Hey everyone, FinTech here. Today to talk about two very similar stocks in my portfolio, FSLY and Cloudflare. Both companies provide CDNs, both companies are moving into edge computing, and both companies provide security services. And they are also both growing like crazy. In this video, I will review what the company does, how the numbers show the company is performing, and what makes these two companies fundamentally different. Now, to understand each company better, you first have to understand where they came from. With FSLY worth $9.6 billion and Cloudflare worth $11.7 billion, you know there must be some backstory to how they got to where they are today. Let's start with Cloudflare. Cloudflare was founded by three co-founders. The first was Matthew Prince, who was a computer science undergrad turned lawyer at the University of Chicago. Prince has founded several companies, including one called Unspam Technologies, which basically does what its name suggests and blocks spam. That company's chief software architect, Lee Holloway, went on to co-found Cloudflare along with Prince, who not only built Cloudflare's early technology, but he was in large part responsible for the engineering culture which was established at that company. In 2007, while Matthew Prince was on a break from Unspam Technology, he decided to attend Harvard Business School, where he met Michelle Zatlyn, the third co-founder of Cloudflare. Michelle had graduated from Canada's prestigious McGill University, where she studied chemistry and business, another science and business background. While there, Zatlyn and Prince won Harvard's business plan competition with a project they called Project Web Wall, which would basically act like a firewall for the web. After winning, they moved out west to join Holloway into building this into an actual company. The company they founded was Cloudflare, and they started out primarily with security in mind. Prince describes what they do as kind of like an internet-wide immune system. They can look at all the traffic that goes in and out and try to recognize patterns which will let them identify bad actors and stop them. But it can also recognize good actors and try to optimize their experience. This mindset allowed Cloudflare to quickly grow from just providing security technology to also providing other services. They provide performance products like intelligent routing, as well as reliability products like vendor-neutral load balancing. And all of this was provided as a service, meaning no hardware or code changes were required for customers to get on board. Quick pause there. If you're enjoying this video, make sure to leave a like and consider subscribing. It really helps boost this video for the YouTube algorithm. Okay, back to the video. Cloudflare basically said, okay, we want to have the best security offering in the world. So in order to do that, we need to host the content ourselves. So they built a CDN. They then said, okay, but how do we secure all the computation that's going on? Well, the only way to do that is to host it ourselves. So they started an edge computing platform. Cloudflare's goal is basically to take its existing products and then build new products that both enhance the existing products and provide new benefits to customers. Now let me interject here and define a few terms. The first is CDN, or Content Delivery Network. Basically, this is a network of servers across the entire world with the goal of having as many servers as possible as close to the people who will be accessing a specific website as possible. So for example, YouTube. You're currently streaming this video off of YouTube. Now, in order to do that, you need to be physically close to a server near you to reduce latency as much as possible. This is why you're able to stream in real time, as opposed to if you were streaming from a server that was thousands of miles away, which will always have latency due to limitations with the speed of light. Edge computing is very similar. The goal with edge computing is to have computation power as close as possible to the end user. This is again to reduce latency. Really low computational latency is important for things like cloud gaming, like Google Stadia, or real-time voice processing like Amazon Alexa or Google Home. Today, through a mix of sleek marketing, great products, and a rock-solid business plan, Prince and Zatlyn have managed to build Cloudflare into a company worth over $11 billion. The third co-founder, Lee Holloway, unfortunately had to leave the company due to a debilitating brain illness known as frontotemporal dementia. Wired actually has a really good article on this, which I'll link to, but fair warning, it's a pretty sad story. In addition to performing incredibly well in the past, Cloudflare's future seems equally assured, with new products coming out to support serverless computing that has both higher speed and security than even behemoth Amazon Web Services Lambda offering. Just by looking at this company's ticker symbol, you can kind of get an understanding for their greater ambitions. Net. They want to be the internet. Cloudflare thinks it's time to take the somewhat archaic 1980s technology that the web is built off of and bring it into the 21st century, and they think that they are the company to do it. But there's another company who seems to have similarly large ambitions, who is also growing at an incredible rate while developing exceptional products. FSLY. FSLY took a different approach from Cloudflare while starting out. Founded in 2011 by Artur Bergman, FSLY set out to build a better, faster CDN based on his own experiences at a community site hosting web company. And FSLY succeeded. They gained customers such as GitHub, Twitter, and Google for their CDN. FSLY realized that there was a much bigger opportunity than just hosting web content, and that was using its infrastructure to support edge computing. Fastly notes that you can use edge computing to do anything from real-time credit card transactions to supporting Internet of Things devices to maybe one day supporting driverless cars. Basically, any kind of computing that can benefit from milliseconds of latency would benefit from edge computing. Only very recently has Fastly also begun to make aggressive moves into security, as demonstrated by the recent acquisition of Signal Sciences. This acquisition let Fastly move beyond mere web firewalls and DDoS protection into more advanced areas such as bot mitigation, API protection, and ATO protection. So that is some background on the companies. Now let's take a look at the numbers. Now these numbers that I'm going to show are going to focus primarily on revenue, gross margins, and growth rate. I don't really care that much about profitability with these kind of companies because I want these companies to be investing all their money into growing even more and not taking a profit in the short term. Fastly has a market cap of $9.92 billion and Cloudflare has a market cap of $11.72 billion. Looking at Fastly's last quarter earnings, Fastly had top line revenues of $75 million or a growth rate of 62% year over year. Now Fastly is essentially guiding for no growth next quarter so that their total growth for the year is going to be around 50%, but that's still a really high growth rate. Fastly's dollar-based net expansion rate was 137%, which is actually an increase from 133% last quarter. What this means is that for every dollar one of their customers spends, Fastly can expect them to pay $1.37 next year. Their total customer count increased to 1,951 customers, up from 1,837 customers just one quarter ago. That is the largest quarterly growth in customers that they have experienced in their entire existence. Additionally, their enterprise customers specifically increased by 7, from 297 to 304. Those enterprise customers generated around 88% of the trailing 12-month revenue for Fastly. Next, let's look at gross margins. Fastly actually increased their GAAP gross margins from 55% last quarter to 60.2% this quarter. And they also increased their non-GAAP gross margins, which are basically gross margins if you take out the stock-based compensation, from 55.6% to 61.7% this quarter. Additionally, they forecast their revenue for the year to be between $290 and $300 million, which, like I mentioned earlier, would be around a 50% growth rate. Now, one number that I've seen being brought up a lot in the news is the fact that TikTok makes up 12% of Fastly's revenue. Earlier on, when there were some fears that TikTok would get shut down in the US, this caused Fastly's stock to drop 21%. Later, when it turned out that Oracle and Walmart were going to be buying part of TikTok, the stock then went up 12%. This made no sense to me because only half of the revenue that Fastly got from TikTok came from within the United States, which means that only 6% of their revenue is at risk. This somehow justified 21 and 12% swings in their stock price. I have no idea why this was happening, but I don't think it was entirely rational. So now let's look at Cloudflare. Cloudflare had revenue of $91.3 million last quarter, or up 47.8% year over year. Now, while this growth is not quite as high as Fastly's this last quarter, Cloudflare's growth has been rock solid. Let me just read off some of their growth rates over the last several years. From 2015 to 2016, Fastly grew 59.11%. To 2017, they then grew 43%. In 2018, they grew 49%. And now this year so far, they've grown 48%. Cloudflare is executing on its business plan like clockwork and growing around 50% every single year since 2015. I think this is a clear reflection of the way Prince and his team run the company. Cloudflare had GAAP gross margins of 77.2% and adjusted gross margins of 78.3%. Their dollar-based net expansion rate was 117%. So like Fastly, for every dollar their customers spend, they can expect them to spend more in the future, but this was a little bit lower than Fastly's. Some other interesting statistics for Cloudflare: they have 8,500 edge servers in 200 cities across 95 different countries. Also, 99% of the internet-connected world population are close enough to one of Cloudflare's servers that they would have a latency of under 100 milliseconds. On average, they block 41.5 billion cyber threats every single day. One interesting anecdote: there was a food delivery company which decided to sign up for Cloudflare workers for edge computing. It's basically a competitor to AWS in a $600,000 deal. They did this because they thought Cloudflare would be faster, more robust, and cost less than AWS. That spending then nearly doubled, increasing $500,000 once everybody had to start working from home. This clearly shows that Cloudflare is benefiting from the current trend toward cloud computing in general. Now, Cloudflare did have some issues in Q1 of 2020 in meeting their hiring goals, but they did announce that they're going to step up hiring in Q2, which means that their growth rate should increase in the future once they're able to keep up with the number of positions that they need. So to summarize, both companies are growing at around the same rate. Cloudflare has higher revenues and higher margins. Fastly has a higher dollar-based net expansion rate, and both have a really compelling story. So which company should you invest in? Well, quite frankly, I have no idea, but I can tell you what I'm doing. I think Fastly builds fantastic products which will continue to gain market share as the best products in their category. I think Cloudflare is a fantastic company with an extremely clear vision that will continue executing into the future. So I bought both of them. Yes, both companies are growing like crazy at over 50% every year, but they're still both minuscule compared to competitors in the area such as Amazon Web Services, Microsoft Azure, and Google Cloud, which had revenues of $10.2, $11.9, and $3 billion respectively. Because of this, there is still plenty of room for both Fastly and Cloudflare to grow without eating each other's piece of the pie. And then once they do become big enough that they are overtly competing with each other, it's not really clear that one has a huge edge over the other at this point. I mean, you have to ask yourself what wins. Best-in-class products with a well-known company that developers know and trust, or extremely good products with exceptional marketing led by a rock-solid leadership team. At this point, I think it's too close to call, and there's not really a purpose for determining a winner at this point. My plan for now is to hold both, monitor both, and if one company clearly starts executing better than the other in the long term, well then I'll add more to my position in that company. Now your takeaway might be totally different, and if you think you have a good argument for why you're picking one company over the other, I'd love to hear it in the comments below. I read and respond to all of them. Now, if you are interested in stocks or you just want to get started, one of the easiest platforms to use, which I've used in the past, is WeBull. If you sign up using the link in my description, you'll get one free stock. And then if you deposit $100 or more, you'll get a second stock valued between $800 and $1,600. With that said, I hope you enjoyed this video. If you did, make sure to leave a like. And if you don't want to miss out on any future videos that I release, make sure to both subscribe and hit the notification bell down below. I'll see you next time.